Today we're breaking down 3 of the most popular ETFs tied to the Nasdaq 100, QQQ, QQQM, and TQQQ. If you've ever wondered which one is right for you, stick around because we're going to cover the differences in plain English. And before we dive in, make sure you hit that subscribe button so you don't miss future breakdowns on funds, investing strategies, and all things markets. Let's start with QQQ. This is the classic Nasdaq 100 fund. It's been around since 1999, and it's one of the most liquid ETFs on the planet. Traders love it because you can move in and out quickly, spreads are tight, and it gives you straightforward exposure to the 100 largest non-financial companies on the Nasdaq. The only drawback for long-term investors is the cost. The expense ratio sits at about 0.2%, which isn't bad, but there is a cheaper option. That brings us to QQQM. Think of QQQM as the younger sibling. It tracks the exact same index as QQQ, but it came out in 2020 with a lower expense ratio at 0.15%. For a buy-and-hold investor who just wants exposure to the Nasdaq 100, QQQM is often the smarter pick because you're paying less in fees over time. The trade-off is liquidity. QQQM doesn't trade nearly as much as QQQ, but for most long-term investors that doesn't really matter. You're not moving in and out every day, you're holding for years. Now, TQQQ is a completely different animal. This is a leveraged ETF. Its goal is to deliver 3 times the daily return of the Nasdaq 100. So if the index goes up 1% in a day, TQQQ aims for 3%. Of course, the reverse is also true. If the index drops, your losses are magnified. This fund is designed for short-term traders who want to amplify gains during intraday or short bursts of momentum. The expense ratio is much higher, close to 0.85%, and the volatility is extreme. In fact, TQQQ has had drawdowns of more than 80% in past market cycles. It's not something you buy and forget about in a retirement account. It's more of a tactical tool for experienced traders. So here's the big picture. QQQ is best if you want liquidity and flexibility. QQQM is the long-term cost-efficient choice for investors who just want Nasdaq 100 exposure without worrying about daily trading. And TQQQ is for people who understand leverage, accept the risks, and use it as a short-term play, not a long-term holding. Alright, that's the breakdown. If you found this helpful, make sure to hit that like button and subscribe for more deep dives into ETFs, investing strategies, and market analysis. And let me know in the comments which one you've used, or if you're thinking about making a switch. Thanks for watching, and I'll see you in the next video.